Hey folks, Patrick France here, host of my podcast, The Everyday Millionaire, as well as I am the CEO of the Real Estate Investment Network. There is a lot of things happening in Canada's real estate world, and we often look at the macro picture of what's happening, then we get regional, and then we really break down what's happening economically based on the fundamentals that show us where real estate is going. And today, however, I want to get very specific. You know, the one province that has become a standout is Alberta. Today, we're going to unpack what's happening in Alberta, get into the real nitty gritty of, I guess, why Alberta, why now, or perhaps why not. But we're going to break down what's happening economically in Alberta so that as investors, as home buyers, we can start to make decisions based on what the reality of Alberta is. And I got to tell you, it's pretty good news. So settle back. I'm going to go through a lot of numbers, a lot of charts. I want to share with you what's happening in Alberta right now in this very special report. And while I'm at it, if you're liking what you see here, please subscribe, hit the like button, follow us, hit the bell so that you get notifications as we continue to push out content. And let us know in your comments, what do you like about this segment? What do you not like about it? Listen, we're good with either, but either way, give us a comment, give us some feedback, and we're going to continue to produce great content. So I'm going to start with just taking a look at an overview and a summary of what's happening in Alberta in terms of housing. You know, at the end of the day, what we're starting to see is that housing continues to be on track for what we would say is catching up to what has been an underperforming market for previous years compared with the Canadian market in general. If you want to compare to other provinces, Alberta, as many of you know, has been lagging, has been for quite some time. The real estate side of things, unless you're specifically really clearly having an investing strategy that has a BRRRR or a fix and flip or renovate to rent where you're upgrading the particular property, it's been very tough to get appreciation in Alberta over several years. Rents have been remaining quite flat. But having said that, we're starting and have been since 2018 and 19 starting to see that shift. You know, the economic fundamentals are really starting to gain more strength and definitely trending in the right direction and have been for, like I say, the past 3 or 4 years at least. And it remains more affordable today than it did 15 years ago when you put it in relative terms. And it's actually the only province that can make that claim. Now, this goes back to a lot of things that we've shared, along the way, which is that people are moving to Alberta. And why are they moving to Alberta? Let's just put it on the table again. People are moving to Alberta for a number of reasons, not the least of which is affordability. And not just affordability in housing, which of course we know that house prices, condo prices, and just real estate prices in general in Alberta are far lower and have been along the way. But overall affordability, I'm talking about the cost of food, the cost of fuel, the cost of just living is far less in Alberta than it has been in many of the other provinces. Saskatchewan and Manitoba are in a line, kind of lined up with what's happening in Alberta. Now, having said that, people are moving to where affordability lives. You know, so cost of living, cost of housing, less taxes in Alberta, given that there is no HST lifestyle. And for businesses that are setting up there, you know, it is less expensive to set up business. Now, unemployment rate is in that very, very, depending on what specific city, but overarching, you're looking about 6%, which is a really healthy unemployment number. You know, I like 6.5%, even 7% in this kind of a churn. It just keeps the market, more productive, viable. You're not having the wage pressures and the cost pressures that go along with low unemployment that many provinces and cities are experiencing now. So the resale market remains really tight. They don't reflect the current inventory shortages, and there is a lot of inventory shortages, and housing, in fact, is not keeping up. We'll talk about that shortly. You know, the shortage of single-family housing in the resale market with detached inventory in Calgary is down 42% year over year and 63% from 2019 levels. Now, a lot of these stats that I came by are kind of a variation of what's happened up till now in 2023. So there may be a difference of 30 days kind of thing. But the big thing here that we start to see is that construction activities increased over the past couple of years. But some of the concerns of people is, are we going to go back into this overbuilt situation? And it's just not happening, of course, when we start to see the population growth. Now, falling building permits are pointing to a short-term slowdown in construction activity. And I've mentioned this in the past before. We want to watch that activity slow down because, of course, that represents jobs. Overall, though, when we look at the kind of the base layer of what's happening in Alberta economically, continues to be very strong. Now, falling energy prices has maybe made things a little bit softer, but not really. And I want to say, I've shared this thesis many times. I still see oil prices going higher. Those individuals that I follow, the research that I have been doing still lends itself to seeing an increase in oil prices down the road. And I'm talking late 2023 into 2024. I think we're going to see oil prices start to come back. Now, I know there's some argument about that because of China's slowing economy and the demand, but there's also the other side of that conversation, which is just strictly supply in terms of what the US is doing and how they're just living off their reserves right now. So there's no new production coming online. OPEC has cut back a couple billion barrels a day, or a couple million barrels a day. The point is this, is that supply is going to continue to be an issue with what's going on in Russia, Ukraine. Russia was a big supplier. That's going to be limited. So overall, there's a global impact on oil. I just see it coming up in price later on. Well, yet to see, but I'm still hanging on to that thesis. I don't have a reason to change it right now. And if I find a reason, then I will definitely change it. So, we have to acknowledge that the Bank of Canada has been in the most aggressive rate hike cycle in 30 years. We're all very, very aware of that. I always go back to one fundamental thing, is that rates will go up, and we don't know how long they're going to be that way. But ultimately, I think there's going to be a shift back down. I'm not saying dramatic. I don't expect us to go back to 1.5%, 1%, those kind of numbers. But I think they will come back down and settle in. Here's something that's interesting. Only a third of mortgage borrowers have seen payments rise so far. And that is the case because fixed mortgages plus banks are doing kind of crazy things in the background, extending amortizations. But we're going to start to see that. They're saying 100% by 2026 if the rate holds at current levels. Now, will it hold into 2026? Who knows? My guess is as good as anybody's. My tendency is to believe it won't. I think it'll come back down a little bit, but we'll see what happens. Household debt service ratio is going to hit a record high by 2024. We're already at record highs. Mounting signs of stress. These are all the risks in the market, by the way. 10-year highs in credit card and auto arrears. This is something that we've talked about before, is what's going to slow down an economy is this rise in interest rates, the rise of servicing debt, household debt, people having to pay more for lines of credit, for credit cards, for just living their life on a day-to-day basis, week-to-week basis. And that takes out disposable income. That will, in fact, slow a market down. And I know this sounds like a jab, and kind of it is, as we see taxes rising in Canada overall, that also takes away from disposable income. That will, in fact, slow economies down. So the Canadian economy is just very interest rate sensitive. We are a consumer, debt-driven country, if you will. That is what drives our economy. Housing is a big part of that. I've said it many times. But economies in Ontario and BC are far more rate sensitive, and that's population based, and that's based on the cost of housing, for example. So those provinces will be heavily stressed by higher rates, and it could cause a national recession long before rates become a crisis for borrowers in Alberta. So as much as we can see a national recession, for example, we may not have the same impact in Alberta given what's going on. So our massive population growth, and we're going to get into a couple slides right away, is really heavily driven by non-permanent residents, which could slow things down sharply in a recession. So in other words, non-permanent residents are here, but if all of a sudden things start to come off the rails, we could see things slow down a lot, not have that same level of immigration. Now, this is all to say with that population growth, always the conversation is about people moving in. Now, let's just start at the kind of the top and work our way through this. So home sales continue to rise. They rose 5.1%. That's at a national level. And that's after accounting for normal seasonality. So this is, again, we're looking at data that may be 30 or 60 days. This is April, so May, June. So basically 60 days old. We'll see what the new data is. This is always lagging data, but it's just an update of what's going on. There is a long-term supply crunch, and here's the thing about the supply crunch: single detached housing starts, the 3-month average in this case is declining, and this is in spite of the government programs and all the things that they're talking about. Again, but I hate to be kind of that sarcastic person around it, but I'm going to say that when the source of the problem, which is in fact our 3 levels of government, federal, provincial, and municipal, when they are in fact the source of the problem, they will not be the solution to the problem. And I'm just not finding a reason to be optimistic about this supply crunch being handled anytime soon, given the immigration into the country, as well as the overarching slowdown in construction and builds. Mortgage arrears still near record lows. That's one thing Canadians do, is they pay their mortgages. Probably we'll start to see a spike up over the next couple of years. We'll see how dramatic it is. I don't suspect it will be dramatic. People are very creative when it comes to paying their mortgage, and that could mean getting roommates, having family move in, all sorts of workarounds. But ultimately, I don't see those arrears shooting up too badly. We'll see. The upbeat real estate outlook continues. Canadians now feeling more optimistic regarding the prospects for real estate as an investment, and that's interesting. I think that that plays specifically into regional environments for investing in real estate. We see a pullback in that regard in Toronto and Vancouver. Builders are desperately putting out deals to get condos on the market and get them sold. We talk about population growth, and this chart is just really a good indication of how dramatic it is. We're up to 40 million. I think that's theoretical. They haven't done a census, of course, but they're saying that we've hit 40 million people in Canada. They compare things to the USA population growth. I'm never attached to it. It's we don't know what those numbers are. I have a tendency not to believe those numbers, but certainly with Canada, we know that we're million people coming into this country. So GDP growth by province. Now, this is where we'll start to get into a little bit of the minutia of why Alberta and where we see things going. Now, this was, of course, a 2022 chart, but you can see where Alberta was. The thing about it is that Alberta stands out and will continue to stand out just in what they're doing in terms of productivity. And the industries that by share of GDP for Alberta, this was 2022, but it won't change much going as we get into 2023 and get more data on 2023. We look at mining, oil and gas, real estate, construction, and you look at about 26% as a oil and gas share of GDP. Now that is very high. It has come back a little bit, but the point is that it's not as dependent on oil and gas as it has been in the past. Now, here's something to note that is really important to understand, is that when we look at the median age of the provinces, Alberta is a very young province. So why is that important? Number one, that's workforce age. Number two, that is having families age. So when you start to settle into a province, when you're of that age group, you've got a good job, you've got a good income, which is jobs and average income is still the highest in the country and the lowest cost of living. Guess what? People want to settle in there. This age group wants to settle in, have family, and it's an important part of sustainability in terms of population in the province. We look at CAPEX, capital expenditures, oil and gas, and there was this is something that JG and I talked about in Rein It In. And I want to just point out that we've come back a little bit into that 2016, 17, 18 level, which is great. I don't think we'll ever get back into that 2014 level. We may, but I don't see it, given technology, given what it takes to extract, given the infrastructure that they built in those early years, 2014, 2015, for example. That infrastructure is existing, and they have certainly not hit capacity. So they built an infrastructure, and the capacity that they have is not testing that level of infrastructure. Now, I'm not going to say that I'm an expert in the oil and gas. So for those of you who are in the oil and gas industry, you may be going, Patrick, you're out to lunch on that comment. But I know some fundamentals, which is that the technology that supports oil and gas production, extraction, et cetera, has left us with less cost. So capital expenditures are not as necessary as they were. So we'll see where that goes. And at the end of the day, it's still very, very healthy and it's great. Now, we talk about Canadian population growth. I think we would be remiss not to point out just how many people have been moving to Alberta. For you who have been following the Rain Channel or following the Real Estate Investment Network and understanding what we do and what we talk about, this is no surprise. This goes back to, again and again, we say people gravitate to a number of things. First, they want a job. Secondly, they want a place that's affordable to live. They want to be able to perhaps either buy or rent a home that they can afford. So Alberta continues to be that province, higher incomes, better affordability, and great jobs. And those are the things that are going to attract people into that province, and a good lifestyle. We can joke about the cold and we can do all those things, but ultimately we're Canadians. We're used to the cold, and as much as we may not like it, we have to look at our lifestyle and what we can do in that particular province in terms of living there. Now, this is all to say this: affordability continues to be an issue from an interest rate point of view. And as investors, when we look at why are we buying real estate, why would we buy real estate in a province like Alberta? At the end of the day, we've got demand. So we look at the issue of demand as real estate investors. What do we always want to know? We want to know that we're going to have renters and that we're going to be able to cover the costs of our property. And in Alberta, you have that advantage because you do have a lot of people moving into the province. You've got the opportunity to raise rents because you don't have the degree of rent controls that they do in Ontario or BC, for example. Now, when we look at net interprovincial migration, we see, Ontario. Now, Ontario has a lot of people moving into it. This is net interprovincial migration. So we see people moving out of basically Ontario, Manitoba, Saskatchewan, a little bit, even Quebec. But ultimately, where are they going? They're going into Alberta. They're going into the Atlantic provinces. Now, here's the thing about that. Why are they doing that? Again, it is always about, not always. In this case, it is about jobs. It is about affordability. It is about having a place to live and having the job that will support you in making those payments. And right now, that's where people are heading. Ontario, the affordability issue continues to be a big issue, very, very expensive, as is British Columbia. British Columbia is a lifestyle choice for sure. And no doubt that the average income or the average net worth in BC is higher across the country. So net interprovincial migration, again, we see, 45,000, so far, 4-quarter total. So this isn't going to change. We're going to continue to see this immigration as people come across the country. Mining, quarrying, oil and gas extraction as a share of GDP, 27%. That was by the end of, or early 2023, end of 2022. We start to see it come back up again, but we're also starting to see other industries expand. And that's the good news around all of it. As much as there is risk in the oil and gas industry, always in Alberta, it's not nearly what it was even 5, 6, 7 years ago. So as the economy expands, and I have to say that, politics are politics, but ultimately the leadership right now is looking very, very promising. Danielle Smith delivers on what she says she's going to do. I align with a lot of the direction that she's going. Now, median age, we talked about net debt per capita. Again, Alberta is the lowest net debt per capita. So in other words, while we look at these other provinces and we see a lot of household debt and individual debt, it's not near, or Alberta's not near what many of the other provinces are. That goes back to cost of living, higher incomes. Those are the things that are going to keep that down. Net debt to GDP ratio, Alberta is the lowest of the provinces. As a matter of fact, even their deficit is very low. So the point of all of this is that Alberta as a province remains economically strong. We look at the number of people that are moving into the province, and that remains very, very strong. This will be an initiative or a movement, if you will, to affordability and to great jobs, which is what's happening. Now, monthly building permits in Alberta are down, and this speaks to one of which is supply, and the other in behind that, to me, it's a little bit of a leading indicator for where are the jobs going to be in that construction industry going forward. This is part to me is a risk. As much as it talks to the lack of supply, it also speaks more to the risk of jobs, and we're going to want to keep an eye on that number. Housing starts, again, another trend down, and this is something we've talked about before. So when we look at what's happening in Alberta, the point of this overview is there's a lot of optimism, or a lot of reason to be optimistic as an investor in Alberta. When we look at specifically, Calgary, Edmonton generally has a tendency to lag behind Calgary. I'm going to say it, and I know that it's political. I'm concerned about the NDP initiatives that are happening in Edmonton specifically. That is a political, I know that's a political statement, but you have to look at what our politicians are doing. And ultimately, when I look at Edmonton, I'm a little bit more cautious about it, and somewhat skeptical about what they will do in Edmonton and how they will move forward. Now, I could be totally wrong about that, but that's how I'm viewing it. Now, on the other side of it, we see Calgary, we see Lethbridge, we see Medicine Hat, Grand Prairie. I mean, there's a lot of opportunities for real estate investors to get in that market, to actually do exceptionally well in that market. Real estate will, in fact, appreciate at a reasonable pace, I believe. And the bigger and most important part of it is you've got a strong client base called the tenants we need to be a rental housing provider to operate our business of investing in real estate. So hopefully you found this helpful. Love to hear your feedback. Always like to see good, bad, indifferent. I'll do my best not to take anything personal, but ultimately I do this so that I can support you in making great decisions. I'm very bullish on Alberta. I remain bullish on Alberta. This is something we've been talking about the past almost 4 years in a very, very direct way. And hopefully you've been able to take advantage of some of that guidance and make some great investing decisions, buying good cash flowing properties, or at least engaging in a tactic and a strategy and a tactic that makes sense for you profiting in this great real estate market in Alberta right now. That's it for now. See you next time.